Here's a question that has been debated in financial circles for decades. Should you pick individual stocks or just buy index funds? Index funds simply buy a small piece of every company in an index, like the S&P 500. You own 500 companies at once. Your returns match the market.
Index funds offer
Stock
steady
picking
and passive
means
gains.
researching
Stock
individual
picking is
companies
highly
and choosing
volatile.
which ones to
See how
buy,
these bars
trying to
bounce with the
outperform the market
Choose
average.
consistency over
After
risk.
10 years
Index
of data,
funds offer
here's what the
steady and
research
passive
consistently
gains.
shows.
Stock picking
Roughly
is highly
90% of
volatile.
actively
See how these
managed
bars
funds
bounce with the
run by
market?
professional
Choose
analysts
consistency over
fail to
risk.
beat the S&P
Index
500
funds
index.
are generally safer
If professionals
than
with
individual
full-time
stocks.
research teams,
They
Bloomberg
instantly
terminals, and
diversify your
decades of
portfolio.
experience can't
This helps you
consistently beat
build
the market,
long-term wealth.
what are the odds for individual investors? That said, stock picking isn't completely without merit. It makes more sense if you're highly knowledgeable about a specific industry, have a long time horizon, and treat it like a hobby with money you can afford to lose. For most people building wealth for retirement, the data is clear. Low-cost index funds win over time because of lower fees, automatic diversification, and market-matching returns. The biggest hidden cost of stock picking isn't just lost returns. It's the time and emotional energy spent monitoring positions, reacting to news, and second-guessing decisions. The optimal strategy for most investors, put 90% in broad index funds. If you want to pick stocks, use the remaining 10% as your learn and experiment allocation. Your action step: open a brokerage account this week if you don't have one. Set up a monthly automatic investment into a total market index fund. Then let compound interest do the work.